Good morning, everyone. Welcome to Ainsley News. Welcome to Thursday, everybody. Today we're talking takeoff versus tantrum. That's right, takeoff versus tantrum, practically miraculous. Buy the rumour, sell the fact became sell the rumour by the fact last night as the Fed confirmed it will commence tapering this month. And shares went up. In a classic human behavioural response, given the almost certain announcement, the market clearly hasn't put the charts that we're going to show today side by side. There's a heap of charts, so make sure you jump over to ainsleyBullion.com.au and get some closer insight there. We'll talk you through it here today, though. That S&P 500 and the Fed balance sheet, as far as debt's concerned, almost tracking on par. For podcast listeners, the first chart shows an incredibly tight correlation and simultaneous upward projection between and of the S&P 500 and the amount of money printed by the Fed since Biden has come into power. Second chart shows the $15 billion a month reduction of the current $120 billion a month money printing program, seeing it end June next year. And while shares rallied last night on "it's different this time," the four most expensive words in finance, other cool heads saw it for what it was, a major policy mistake of too little too late, and maybe not even what that second chart that we showed you implies. Curvature Securities last night pointed out a nuance missed by most. They said the tapering announcement was generally as expected, but at the same time a little different. Yes, the FOMC announced the Fed will purchase $15 billion fewer securities beginning in November, basically as expected. However, here's the interesting part. The Fed pre-announced a second tapering of $15 billion in December. That means that beginning in January, tapering is still a wild card. We will expect another cutback of $15 billion in January, however, it's not guaranteed. Theoretically, they could stop tapering in January, or they could increase the pace of tapering. Overall, it looks like the December FOMC meeting will be important for the markets. It's probably nothing as the market reaction, whether they said, "but we never committed," or it'll be just as brutal. Whilst the Fed subtly changed their wording from inflation definitely being transitory to being expected to be transitory, they are still talking down any raising of rates for some considerable time. Last night, the interest rate future markets brought forward their expectation of heights now as early as June and then a second rate by the end of 2022, much more aggressive than the Fed forecast. Chief Investment Officer for Guggenheim, Scott Marnard, didn't mince words, saying, "We're clearly setting ourselves up for policy error. There is no way we have engaged in the sale or scale of asset purchases in the pandemic where there's going to be a policy which ultimately is going to be perfect and not cause some sort of interruption to asset prices, or something else that would be destabilizing. I think that would be in the realm of practically miraculous." Indeed. Fascinating stuff there from the US, and interesting to see the ASX 200 also improve today on that news as well from them tapering. Jump out of ainsleyBullion.com.au for all things physical, gold, silver and platinum. If you think now's the time to grab some of that physical stuff, jump online and grab into it. ainsleywealth.com.au. Bitcoin's been travelling sideways for a couple of weeks now. Could be the right time to jump in. That's ainsleywealth.com.au for all things crypto, and goldsilverstandard.com, of course, our own crypto built and backed by real gold and real silver. Enjoy Thursday, everyone. We'll catch you tomorrow for end of week news.